Alright guys, let's break down a couple of trades I made this week, starting with the first one. Now, this was one of those trades that with a bit of experience you have no hesitation in my view taking. But before we jump into the trade details, I want to first talk about my bias. Now, take a moment here to look at the overall structure and price action and ask yourself why we sold up here and what is the bias that we are looking for. To begin addressing, I think, these questions, the initial step, in my view always here, is to pinpoint the range we are operating in. And as I've stressed in my previous videos, knowing the range you are operating in is like having a heads up on where the market might be headed next, which honestly can make a huge difference in terms of spotting high probability trades. And this is because understanding the range, I think, enables you as a trader to anticipate potential shifts in price direction or breakout opportunities, giving you this way a nice edge in the market. The other thing is that after this impulsive reversal here, we have been basing for the most part of this larger move. Now we know that prolonged coiling or consolidation periods after a price dump usually indicate accumulation is taking place. We also know that we have been consistently generating liquidity if you look at this whole sell action down here with these lower lows followed by these higher lows. After that, we sort of rally up here and fail to take out the recent high before reversing back down. Now, a key point to highlight here is that before this upward move started, we spotted these three imbalance zones here, which were quickly rebalanced via a 25-point downward wick. I think that this move was an extrinsic liquidity grabbing move to target the opposing liquidity pool inside this imbalance zone here. Another important element to note is that despite the surge here, during which, and this is important to sort of stress, during which we nearly rebalanced this sizable imbalance zone, price was still unable to surpass the recent high before reversing lower. This is important because this behavior indicates that for the moment, the market is confined within a clearly defined internal trading range as it undergoes a reassessment of its price delivery mechanism. On top of that, such movements signal that whenever there is a contained fluctuation range of 15 to 20 points like this, it presents solid scalping opportunities to rake in on the back and forth movements. And again here, the presence of these imbalance zones coupled with the market's inability to break either to the upside or the downside, despite this whole rebalancing action here on both sides of the range, indicates, in my opinion, the existence of strong underlying support and resistance levels, which basically contain the price within a specific range. These range-bound situations and separately here, I always avoid range trading because I find more value in considering trades during expansion phases when the market prints clear price movements. However, I also recognize the fact that range-bound situations like the one we are discussing can offer solid opportunities for scalping, particularly if you are able at identifying and reacting, to such range containing imbalance dynamics as the one that is unfolding here. Personally, I consider such a back-tested setup as top-notch, and when I encounter them, I know it's precisely what I am after. That's why I entered a long position above the 43 level here without hesitation. And as you can see from the overall price action, the setup performed great. I clearly experienced immediate upward movement with almost zero drawdown on entry, which obviously led to both targets being hit. Alright, let's now shift our focus on the next trade. Now, the issue I have with this 5-minute ES trade is that the bias aligned perfectly with what I wanted to see, but the exit was too early in relation to how I should have structured the trade. And it wasn't like I got stopped out or anything like that. In fact, the short sold off super cleanly. Rather, I think I I prematurely closed the trade, even though the conditions were favorable. So let's go ahead and break down this whole action. Now, starting down here, after this surge, we ended up, as you can see in the chart, we ended up creating a sequence of higher highs up here, a dynamic that usually signals the start of a distribution phase, which obviously puts the brakes on an uptrend. Now, up until this point, demand on this markup move was the name of the game, as the bulls, following this sideways action, were clearly in control. However, things started to shift as this emerging distribution phase gets clearly marked by widening spreads and diminishing volume. Now, whenever you get that kind of divergence, that's a sign that we are transitioning from the markup phase to distribution. But here's where I think it gets interesting. This new high we see after this quick fall back into the middle of the distribution zone, well, this print gave, in my view, gave off a false impression about the market's direction, leading to more distribution at these levels, causing unsuspecting new buyers to believe that a breakout was imminent, and that obviously got them drawn in. But that's not all. This move also saw the smart money seizing the opportunity at this point to grab short positions from the weak hands just before the down move kicked into gear. So essentially, we had an uptrend running out of steam, with distribution taking over the show. This is then followed by a false mini breakout that also played a critical role in trapping the unsuspecting longs who got too excited. Meanwhile, the smart money sharks, I should say, were just positioning themselves for the impending sell-off. Now, this is exactly the type of setup where you want to trade the reaction, not try to predict the darn thing yourself. That's why I put my short on just above that 48 level, betting that this market was going to head down south. From there, I just let things play out. Another thing that further confirmed my bias was this strong bearish candlestick printing a lower high. That's an additional signal that shorts are starting to gain control, potentially steering the market into a downtrend territory. So once we started breaking down here, the only thing, in my view, still holding price up was this 44 support level here. Now, my thinking after my first target got hit was to, lower my second contract right below the 36 imbalance zone here. But somehow, as I was trying to adjust that PT, I ended up just closing the whole trade out. Now, the reason I said earlier that my exit was premature in relation to how I should have structured this trade has to do with the fact that, and conceptually here, the trade worked. I mean, I clearly nailed the top here, risked $150 to back 500, and closed it out cleanly, clean as a whistle, no problem. But what I failed to see is that this trade had some serious legs. I mean, I should have just let this runner keep on running. Here's what I'm getting at. A reversal model, like Wyckoff's distribution phase, can be detected when price is likely to end one swing and kickstart a fresh wave in the opposite direction. And that's exactly the setup I had on my hands here. The key, I think, guys, is to spot these phases at those key market levels where value tends to get formed. And these levels usually have a mountain of limit orders stacked up with enough force behind them to shove price in the opposite direction. So while I nailed the entry by trading the setup's reaction as I should have, I made the mistake of predicting the closing instead of letting it ride out, and that obviously cost me a bunch of money left on the table. So the takeaway here is that trade the reaction, not the prediction. In other words, trust the process and let those big fish patterns play out fully once you are locked in. And speaking of runners, this next video is, I think, an excellent example of how to trade the reaction, not the prediction. Alright guys, thanks for watching, and as always, hope to catch you all in the next one.